sure all of you are excited about the fact that I'm going to speak to you about title insurance. Very rousing. That being said, I'm going to make it very short and sweet and give you guys some very pertinent information that's ultimately going to help you when you are going to either purchase your next property or refinance any existing property. Title insurance ultimately is required whenever you are involved in a real estate transaction from one of those points of view. If you're purchasing in Dayton Broward, you need a new title policy. If you're refinancing an existing home, you need an additional title policy. So how do you know, what do you say, well, I've never heard of title insurance, or what's this for? The fact of the matter is it's required to protect your deed. When you write a check to, say, State Farm to cover your insurance for the next year, you are covered on anything you do with that car for the next year. When you buy title insurance, it is the only retroactive insurance you can purchase. You basically, the day you buy it at your closing, it covers everything that was done on your property up until that moment. So it covers you all the way back through the chain of title. 15 years ago, that property could have been transferred by somebody without or it could have been transferred by a husband without a wife signing. This protects you when you buy that property, knowing that anything that happened prior on it, you are covered. If somebody comes and knocks on your door one day and says, I think I own this property, my husband and I lived here 20 years ago, and I never, we divorced and I never got anything. Well, you can pick up your policy jacket, you can call the phone number on it, and you will have a slew of highly educated real estate attorneys that are going to jump to the defense, and you don't have to do another thing. So it really brings you peace of mind. And again, it's required by a lender, so you have to do it when you have to purchase it. Now, most people say, oh, well, I've bought property before, I know my attorney handled it, or my realtor directed me to. And for many years, that's exactly how it's done. And it's still done that way today. The company I work for is an actual underwriter. And what that means is that mostly if you close with a title company or attorney, they issue you a policy that was actually underwritten by another corporation, by a bigger corporation. For many, many years, the only way you can get a title policy is through your attorney or through a title company. Well, about 6 years ago, we've been around for 35 years, I should tell you that, and about 6 years ago, my CEO came to the understanding, he said, everybody pretty much has a computer in their pocket these days. So the day of you, being told by a realtor or an attorney, oh, you're going to go with this closing company, oh, these people who handle my title, this is what we're going to do. That day and age, oh, and you're going to pay this because that's based on the purchase price of your property. You've always been required to pay what's called promulgated rate, and it is a formula with an actual rate that is determined based on the purchase price of your property. If you're refinancing, it's based upon your loan amount. And forever and ever, that has been the figure. It didn't matter if you went with XYZ title, ABC attorney, you paid promulgated rate. Well, the fact of the matter is, since we are an underwriter, my CEO said, I think people, went through a recession, I think people are educated and want to know how they can save money. I think the way of how things were always done doesn't necessarily have to be the way of how it's continued to be done. And the fact of the matter is, they rebranded our company 6 years ago as Title Direct Insurance Group, the only nationwide private direct-to-consumer underwriter. And what that means is that we no longer issue policies to agents and then they pay us a fee and give you the policy. We offer it directly to you, the buyer, and that savings that would have otherwise been paid by an agency goes back in your pocket. Long story short, across the country, your insurance premiums can be 35% less than anywhere else. You can call up any attorney, you can call up any realtor and say, what would you charge on a $300,000 property? And they're going to tell you promulgated rate is $2,100. If you came and asked me, Erica, what would your company, your underwriter, issue that policy for? I'm going to tell you it's $1,200. Now, I don't know about you, but if there's $900 sitting on the floor, I'm not going to pass by and walk away. I'm going to pick it up. And in a real estate transaction, when you are talking about life savings, the biggest transaction you can possibly make, every penny counts. So my point here to you is there is an opportunity for anybody here that is looking to purchase or refinance their home to save minimum 35% off your new title policy. If you want further information, I'll go into detail about it with you privately. One other thing I wanted to tell you, and this is real quick, and you guys might want to even write this down because it's how you save way more money in your favor. Lenders don't like you to know about this, But there's a formula that if you purchase, when you take out any brand new 30-year fixed rate note, okay, so you're taking out a loan, it could be a refi, it could be a purchase, the very first payment, you usually have a little bit of a grace period. Say you close in the middle of the month, your first payment isn't going to be due for 45 days. If you have the ability to double your principal and interest on that very first payment, that means one full payment, and then with your escrows, and then add an additional one payment of principal and interest, you automatically knocked 1 year off your loan. So make one payment early at the very beginning, and you save 12 on the back, plus interest. That's an entire year for one payment up front. The formula only works on your very first payment. The second part of that formula helps you for the rest of the way. If you have the ability to make one full extra payment a year, that can be a little bit each month, that can be one check when you make a bonus sometime throughout the year, one extra principal and interest payment a year consecutively knocks 7 years off your payment, off your loan. So what I just told you right there saves you 8 years of principal and interest off your loan. So your 30-year loan just became a 22-year loan. So remember those tips. If you need any further questions, I'm happy to help. Thank you.